Stock market warning. Wall Street strategists predict pullback amid weak data and high valuations. Imagine waking up one morning to find your investment portfolio plummeting in value, leaving you wondering what just hit the stock market. This is the stark reality that Wall Street strategists are warning their clients about, as they predict a significant pullback in the stock market due to weak economic data and sky-high equity valuations. But here's where it gets interesting. Some of the biggest firms on Wall Street, including Morgan Stanley, Deutsche Bank AG, and Evercore ISI, are sounding the alarm bells, cautioning that the S&P 500 index is due for a near-term drop in the weeks and months ahead. This comes after a furious rally from April's lows that propelled the gauge to unprecedented levels, leaving many to question whether the market has gotten ahead of itself. And this is the part most people miss. The predictions are not just based on gut feelings, but on a careful analysis of the economic data, which is starting to show signs of souring. The strategists are warning that the combination of weak economic data and high valuations is a toxic mix that could lead to a significant correction in the market. But what does this mean for investors? Should they be preparing for a worst-case scenario, or is this just a minor blip on the radar? The answer is not straightforward, and it's an issue that has sparked intense debate among experts. On one hand, some argue that the market is due for a correction. Given the lofty valuations and the fact that the economy is showing signs of slowing down. On the other hand, others point out that the market has a way of surprising us and that a pullback could be a buying opportunity in disguise. So what do you think? Do you agree with the Wall Street strategists, or do you think they are crying wolf? Should investors be taking steps to protect their portfolios? Or is this just a case of market volatility? Let us know in the comments. As we navigate these uncertain times, one thing is clear. The stock market is a complex and unpredictable beast, and it's up to each of us to stay informed and make our own decisions about how to proceed. But here's the question. Are we on the cusp of a major correction, or is this just a minor setback? Only time will tell. But one thing is for sure. The next few weeks and months will be crucial in determining the direction of the market. So, stay tuned. And let's keep the conversation going. What are your thoughts on the potential pullback? And how do you think investors should be preparing? We want to hear from you. S&P 500 could drop 10%. Morgan Stanley's warning, market correction ahead. Could the S&P 500 be on the brink of a significant downturn, potentially losing up to 10% of its value? This is a question that many investors are grappling with, given the recent robust rally in the market. Since hitting a low of 4,835 in April, the benchmark index has surged to 6,316. Representing a 30% increase over just a few months. But here's where it gets controversial. Several Wall Street analysts are now predicting a correction is imminent. Elevate your investing strategy. Unlock powerful investing tools, advanced data, and expert analyst insights with TipRank's Premium at 50% off. This exclusive offer can help you navigate the complexities of the market with greater confidence. According to Morgan Stanley strategist Mike Wilson, the S&P 500 could see a drop of up to 10% as consumers start to feel the pinch from tariffs. In his recent note to clients, Wilson emphasized that a modest pullback in the third quarter is likely. Investors should brace themselves for some volatility as economic pressures begin to mount, he cautioned. But it's not just Morgan Stanley sounding the alarm. Evercore ISI, another prominent research firm, suggests that the index could decline by as much as 15% as investor euphoria reaches unsustainable levels. Meanwhile, Deutsche Bank agrees that a pullback is overdue, citing 3 consecutive months of strong returns as a sign that the market may be due for a breather. Another factor adding to the uncertainty is negative seasonality. Historically, the S&P 500 has underperformed in August and September, with average monthly losses of 0.7% over the past 3 years, according to Bloomberg. This pattern could play a role in shaping the market's trajectory in the coming months. Despite these warnings, it's important to remember that the S&P 500 has shown remarkable resilience recently, returning 10.40% over the last 3 months. This performance underscores the volatile nature of the market and the importance of staying informed and adaptable. So, what does this mean for your investment strategy? Should you be preparing for a potential downturn, or is it too early to panic? These are valid questions, and the answers may vary depending on your individual financial situation and risk tolerance. What do you think? Are you concerned about a potential correction? Or do you believe the market will continue to climb? Share your thoughts in the comments below.